not the ideal 5 quarters to take over, a business and turn it around, but in terms of the goals that you came in with, where do you see yourself? How far have you gotten? How much have you think you achieved?
So the goal which we set out for ourselves was to become the most trustworthy mutual fund brand in the country.
Okay.
It doesn't mean performance alone, it means beyond performance.
How do you measure being the most trustworthy, or how much more trustworthy have you become?
So do we really have a scientific way to measure how trustworthy we are? Not necessarily. But are there enough anecdotal evidences to suggest us that we are becoming more trustworthy? The answer is yes. So at Kotak Mutual Fund, we did two unique things in the Indian mutual fund industry. One, we actually took the path of having as fewer funds as possible.
Yes.
In top of our office, we have a poster which says that funds are like kids and you should not have more than what you can afford. So instead of generating performance through multiple funds, we said that we'll deliver fund return equal to client return.
But the flip side of that is sales become very difficult. I mean, the reason why there are so many fund houses that have so many multiple duplicating funds is that because it's easier to sell and NFOs are easier to sell. So has that been a challenge for you?
So there are two ways to climb Mount Everest. One is the Nepal side, other is the China side. Apparently Nepal side is easier and that's why many people take that path. But then the fun of climbing Mount Everest is when you go China side.
Right.
I don't know whether this is real or not, but I believe ultimately if I want to be the most trustworthy brand, my fund return should be equivalent to client return. The second thing which we did in Kotak Mutual Fund was that how do I assure my investors, my distributors that our fate is together? So we just brainstormed within the investment team saying that can we all demonstrate to our clients that we are putting our money in our own mutual fund. And fortunately for me, the entire company came around and we all took voluntary pledge that we will put our money whenever we want to invest in mutual fund schemes, in Kotak Mahindra mutual fund scheme.
How's that going though? The pledge, if I understand it correctly, the AMC employees said that any incremental investment that they're doing will be done in Kotak AMC mutual funds. How much in terms of, assets under management have come in from the employees, and are the employees happy? Have you had to have conversations in the lifts with people who have said that what's happening, the market is down?
So far, because our fund performance has been top quartile, no employees have a disgruntled face. Okay. Second, in terms of my total AUM, this employee's contribution is quite meaningless. It's not even in fractions. But in terms of my net worth, it's a significant number.
Right.
Now today when I go to my distributors and clients, I simply say one thing, that look, my fate is tied with your fate. Whatever I'm preaching you, I'm also practicing. If I'm recommending you fund X, chances are that my colleague's investment also is in that fund. As a percentage of total AUM, that's a very, very small number. It's a meaningless number. But as a percentage of our net worth, that's a reasonable number.
It is a tough task because the industry has large names which have achieved scale. You are catching up per se. I mean, the company technically that you took over changed names thrice. So there's a lot of, establishing Kotak in the AMC business per se is going to take some time. How are you planning on battling the scale that the bigger guys have already achieved?
So the fact is that the bigger guys have done a great job in bringing the industry to this level. Kotak Mutual Fund had a great platform, and now I just have to build on that foundation. We are not in this business of just growing after market share or grabbing AUM. As I mentioned, my objective is to build the trustworthy brand. And if I have the trust, I know over a longer period of time I will be a winner. My first priority is that whatever decision we take as a firm, are that beneficial to our customer or not? Is it creating value add for them or not? And many a times we do take unpopular decisions. So for example, whole of calendar year 2015, we had a view that interest rates will come down. Most of the fixed income funds had a longer duration than their peer group, and that made us the bottom performing funds. We were always in the last quartile of performance, and every time we were questioning ourselves, are we taking right decisions? And we said, yes, everything is set for interest rates to decline, and we must bear short-term underperformance. We kept on talking to our customers, we kept on talking to our distributors, And obviously some of them were unhappy because for 12 months we were underperforming peer group. And then come the month of March and we outperformed since beginning. Today all our distributors are happy, our clients are happy, and more importantly they are seeing our conviction that here is the guy who is willing to take a call, and even if he is wrong, he's not cutting it because fundamentals support him.
That circles back to where we started from in terms of trust, because it's also important then to build the client's trust to wait with you until it pays off, because a lot of times if once you take an unpopular decision, to have the client hold on until it pays off becomes the challenge. How do you communicate that with your customers?
So there are various ways of communication to the client, but it is the language which is more important rather than the medium.
How
I need
so?
to speak in a language which my client can understand. I can give jargons and I can give simple English. I think we are living in a country where, forget simple English, people want to listen in regional languages. So we are the only fund house in the country which has now, used the diversity of our team. They are not necessarily the, media savvy people, but we have said doesn't matter, you all make an attempt. So now we communicate in Punjabi, Gujarati, Marathi, Uriya, Kannada, Bengali, Tamil, Punjabi and Hindi. I wish I could communicate in more language, but we are trying to communicate such things to our customers, and to a great extent people are appreciating it. And we have seen in the whole year of 2015, where because we were consistently engaged with our distributors and clients, our fixed income funds kept on receiving flows even though we were in the bottom quartile of performance for bulk of 2015.
Getting market share is one thing, but I think the bigger challenge right now for this entire industry is to bring the larger population into the fold of using mutual funds. Now we don't have the luxury, and that's a separate conversation, of pension money flowing into into actively managed equity. But to encourage more Indians to use equity and to use mutual fund equity, we have to first educate these Indians on what equity fundamentally is. How do you plan to challenge that? Because I also want to know, out of your equity portfolio, do you know how many folios are coming from first-time investors who are doing this for the first time?
As Indian equity mutual fund industry, all the equity fund managers put together, the median equity fund manager has delivered 4 times better return than Warren Buffett. So we have been outperforming the God himself for last 15 years. And despite that, we haven't really gone beyond 35, 40, 50 lakh individual unique client accounts. Maybe if we are charitable, we'll say that number is 75 lakh. But at the end of the day, the number is
There's a lot of duplication in those numbers as well.
I mean, in terms of folios, we are 4.75 crore folios, but if I take 10 folios per person, that's about 50 lakh people. So clearly performance alone is not going to work, and which is why we said that let's focus on building trust, because if you have trust, money will flow in.
Do you think that given the current regulatory system that we're in, we're unable to compensate distributors enough?
See, again, it's an evolving thing. The whole point is that at some point of time, we'll have to reduce our expenses to our customers. We have done that in liquid funds, where today, we are really charging very, very low expense ratios. In terms of expenses as a percentage of value, it will be one of the cheapest in the world. There is no other market where so much alpha is generated with such a little expense. Now, how much we have to share with manufacturers, how much with distributors, and how much benefit to be given to the consumer is something which will keep on evolving. But at the end of the day, we must remember that I need to protect customers' interest, but I need to have advisors which can pull the customers to convert into investors, and I need to ensure that manufacturers are also making enough money on their capital invested. So it has to be a win-win for all three. If I'm unfavorable to one vis-a-vis two, or two vis-a-vis another, it's not going to last long.
On an average, and I mean, for the industry and for your company particularly, how long does an advisor or a distributor of mutual funds, an individual IFA, stay an IFA? Is it a valid career that keeps someone engaged through the course of their working life? Or do we find that in 5 years or 6 years, 7 years, the person is looking for the next thing? Because then we are not able to retain the talent. And if we are not able to keep experience, then as an industry, we're going to suffer.
So there's a good part that there are so many people who were in this industry before me. what I'm disappointed is that in many of these IFAs, I'm not finding the next generation coming and joining the business.
Okay.
They are looking forward to greener pastures somewhere else. So somewhere we need to ensure that this advisor community, this IFA community, which has brought so many million people into equity forte, we are able to leverage, and they feel confident in passing the baton to the next generation.
A lot of the banks are still selling ULIPs quite heavily, not selling equity mutual funds with as much gusto as they're selling a ULIP. And this is, I mean, this is common knowledge. Anybody who has a bank account has received a phone call. Is there something wrong there then still that we're not able to? The banks would be the best way to reach any customer. Are we still not able to make these products attractive for people who are selling them over the counter in banks?
So today, you know, from a customer point of view, he needs insurance for protection and mutual fund for return or return on investments. Now ULIP kind of comes in between, where it provides part protection and part return. So it's a kind of bridge whereby, you know, you go from first gear to fourth gear, but you need intermittent second and third gear. Many a times we have still found on the street that insurance, you know, creates a quasi comfort for the investors. Logically and rationally, it probably won't make sense from a return point of view, but it does make sense from a comfort point of view. So it's very difficult to pull people straight from, you know, bank accounts and fixed deposits directly into market. They'll have to go in an intermittent way. And the fact remains that today, courtesy the banking system.
Considering that it's a product that locks people in for at least 3 years, and then in order to break even you have to hold it for even longer, then it's not exactly second and third gear. It takes a lot longer then to graduate from a ULIP onto
Let's
anything
look
else.
at trading versus ULIP.
Right.
If you see, and having run a retail brokerage company, I can say that from that experience, the number of people who are trading consistently are not for more than 6 or 12 months. You know, there's a set of people who come to trade, they lose money and then disappear, and then another set of people come to trade, they lose money and disappear. So clearly, if there was a locked-in period where people had to by force make an investment, they would have benefited a lot. So in some sense, having a lock-in is not a bad thing. It just brings the discipline of becoming long-term investor. We should not treat investors as a homogeneous commodity. They are unique. There is a set of people who need to move from bank account to first debt mutual funds and then eventually to equity. The set of people who need to be told that long-term investment means that you did not look your drop in NAV every day. Just be a Rip Van Winkle for 3 years and then have a look. There's a set of investors who is evolved and they'll take their asset allocation call. So we can't have the same measurement for these different sets of investors.
All right. About a year ago, you started a trigger facility as well. How has that worked out? What sort of success have you had? What have you heard from the customers?
Again, we thought providing triggers to customers will come handy, and you know, they'll be able to benefit from the volatility. The fact is that that's not being used as much as we would have hoped. I think people are still by and large long-term investors, and whenever there is a correction in the market, like it was there in calendar year 2015 and Jan and Feb 2016, they need to be handled. The more we can connect with these people with this kind of soothing message that yes, today we are down, but tomorrow will be a brighter day, and after every night there is a dawn. They need that message on a consistent basis.
So in some sense then, people not activating their trigger facility at a time when the market was correcting is good news. As a fund manager, I suppose it means that people are not panicking, they're not reacting to
So
the
to
day-to-day
a great
movement.
extent, the credit should go to the advisors who have spread this SIP culture. Today we have more than 1 crore SIPs. At Kotak, we have seen our SIP book growing by almost 150% last year. So this is something which is fantastic. You know, in 2008 or in 2000 when the corrections happened in the market, we received a lot of queries and questions, including on personal integrities. In 2015 correction, people were quite comfortable saying that Nilesh, by this days also will pass. Many times we have seen questions in our investor meeting where someone will say that I'm doing SIP for 18 months, 12 months, but I haven't seen great return. And before we could answer, someone in the audience stands up and says that SIP is like a bamboo tree, you have to keep on investing, and then one day, you know, bamboo will just come out of the ground. So that word of mouth publicity which we are getting is, I think, creating a momentum for us.
You have a very interesting fund that's doing fairly well, which is the Kotak Infra and Economic Reform Fund. I want to ask you, have we seen enough reform? Have you seen enough reform as you would have liked or hoped for?
So this is one of the best kept secret of our fund, our fund house. It has done exceptionally well, and yet we haven't pushed it as hard as we should. And this is primarily coming on the back that here we are not predicting business, here we are predicting government policies. And while the government has done commendable job on the road, railway and defense sector, there are many other sectors where there are issues and there are concerns. Now this is the fund which is not meant for a widow. This is a fund which is not meant for retirees unless until he wants to take risk. This is a fund meant for high risk, high return investors.
Someone who can fully understand what they're getting into. Right?
It's like catching a falling knife. This fund can deliver great return, but it can also cause great risk. We are quite bullish on infrastructure sector, but it will be a bottom-up stock picking. It's not that the whole
in a
sector
couple of
will
other
do
interviews, you've actually recommended that people stay away from infra and real estate and anything else that's highly leveraged. And on this side, we have an entire fund dedicated to infra. So I'm a little confused as to where your stand is.
Absolutely, and it's a very fair point. So in this fund, we are not buying leverage companies. We are not buying companies which are exposed to telecom sector or which are exposed to real estate sector.
How many are there left?
How many there are left? Very few.
Yes.
But those are the stocks where we are going to make money. Our job is not to create the length of the portfolio. Our job is to make money for our investors.
This is also a really good time for you to communicate then with the investors of the banking fund. Because I know that you believe we might be in, or we might have maybe one more rate cut in this year. But for those people who are holding banking, PSU banking specifically, it's been a tough ride. Is it going to get tougher? Do you want them to hold on? Do you believe that there's merit in holding on till there's some sort of bounce back?
My recommendation on PSU bank is that they need to bring their house in fundamental order. One, they need to attract talent by paying market salaries. Today they have attracted private talent, but by not paying market salary. Those people have come not necessarily because of commercial considerations. I don't think so we can assume that there will be so many people in the country who will work for PSU banks for non-commercial considerations. We are lucky to get many of them before, but it won't be the trend which we can sustain. The second thing is related to current NPS recovery. The focus is right now on discovering NPS, but now we should also focus on recovering NPS. Clearly we believe there are lots of efforts required. There are certain companies where we'll have to take capital structuring hit because clearly on current equity base they will never be able to service the debt. There needs to be a debt write-off, and in today's environment I'm not sure whether PSU banks have that kind of flexibility to take the debt write-offs without worrying about in future
So you're expecting
inquiries.
it to get a lot worse before it gets better?
My feeling is that in PSU banking sector there will be few bottom-up stock picks, but for the time being it's avoidable sector.
Completely.
You will get a better opportunity to enter.
And for anyone who's holding your banking fund right now, what advice would you give?
To retail investors, my recommendation is that don't go into sector specific fund. Let that be the turf of the informed and experienced investors. You have one large cap fund, one multi cap fund, one small and mid cap fund. Those are the three funds good enough for you.
What about the gold fund? What advice would you give retail investors about the gold fund?
So in calendar year 2016, one of the call which has worked well for us was the gold. On 5th Jan 2016, we recommended our distributors that you should look at gold fund. The price which we were anticipating in Jan 2016 for December 2016 actually happened in March 16. My feeling is that gold prices have run up a little bit, and now probably is not the best time to invest in gold ETF. One can wait for a correction which might happen because of the Fed rate hike in June, and that post that correction will be a good point to invest in gold ETF.
The Focus 50 fund, is this the fund then for the retirees, for the single women, for those who are a little less risk taking than maybe someone who's picking the infrastructure fund? Is that what you would recommend?
Yes, undoubtedly. I find many of the retirees staying away from equity, saying that now I am retired and I don't want to take a risk. My recommendation will be don't make that error, because your post-retirement life is going to be almost as long as your pre-retirement life, and the inflation is something which will come and hurt us, and which is why you need to take appropriate amount of risk. You need to have some exposure to equity mutual funds so that the reward is good enough for you to maintain your lifestyle. And Kotak 50, Kotak Select Focus, Kotak Emerging Equity kind of funds on an SIP basis with appropriate allocation is ideal for retirees as well as housewives. Don't have too much allocation into it beyond your risk appetite, but do have some allocation, and especially when there is a correction in the market, when that portfolio will be showing losses, that's the time to average more.
Well, the good thing is that we've noticed, like you said, the last 1 year, that the Indian SIP investor didn't really stop. Like we've seen it happen in the past. The SIPs continued, and in some cases, the retail investor held up our stock market, which has actually happened for the first time. But now we've reached a point, I mean, we're hearing from investors who've written back saying, okay, it's been a while. Where is this market going to go? Because the kind of mixed messages that are coming out from the media, from all of the analysts on the media, it's up 1 week, it's down the next week. We don't know whether it's the global cues or whether it's the monsoon, whether we're waiting for reform. There's a lot of mixed communication happening on this market.
My call is very simple. Yes. We tripled our GDP between 2004 to 2014, from $700 billion to $2 trillion. In that 10-year period, we created outperformance in so many companies. There were gems of companies which delivered fantastic return to investors. Now, if you take the most pessimistic analyst on India, his call is that in next 10-12 years we'll double our GDP. Considering that we tripled it in last 10 years, double doesn't look a too audacious target. But in terms of size, I'm going to create far more GDP in next 10 years than what I have created in previous 10 years. And if I'm going to achieve that, obviously there will be many more gems which will deliver fantastic return. So this is like Sachin Tendulkar on cricket pitch. He's the world's greatest cricketer, and with his talent, capabilities, commitment, he should have hit every ball for a 6. But he patiently waited and faced so many balls without scoring a run, just saving his wicket, and waited for that half volley to come which he could hit for a 6 or a 4 or score run. And that's how he has become the greatest cricketer. He has not become greatest cricketer by hitting every ball for a 4 and a 6. He has become world's greatest cricketer by staying on the pitch longer than anyone else. So as an investor, we are on a batting pitch like India, where an ordinary fund manager like us are able to outperform God over the last 15 years. So the betting pitch is so good, it's all important for you to just stay on the pitch. Just don't go to hit every ball for a 4 and a 6. It's not going to give you return. Stay on this pitch and then see what kind of value is created.
All right, Nilesh, many thanks for spending time with us.